I mean, the mining space is in chaos right now because of ESG concerns. I mean, there's no other way to put it. The market capitalizations of the public miners, which used to be a proxy to the price of Bitcoin, a way for institutions to invest. You could buy a basket of these public miners. That proxy is gone. The stocks are down 60, 80%, whatever, and they won't be coming back until we resolve this ESG issue. New York is a highlight of that. They're considering, canceling proof of work. That would be a bad outcome for New York. That's not a good idea, but it's frozen capital because New York, Tennessee Valley, Montana, North Dakota are ideal locations where you could put mining facilities under full mandate of hydroelectricity, where you wouldn't need a carbon audit. And I think for miners and data centers, that's a huge opportunity.
Hello and welcome to Money Talks. In today's video, Mr. Wonderful, aka Kevin O'Leary, updates about the importance of regulation in the Bitcoin space, rising inflation, turbulent markets, and why it is crucial to spread your bets among cryptocurrencies, and why the stablecoins are still nascent and will eventually get bigger in the cryptocurrency markets. Make sure to stick around till the end of the video where Kevin O'Leary talks about the role of policymakers in creating and providing more job opportunities for the general public. So without wasting any more of your time or my time, let's dive right into this video.
A lot of people don't want regulation, but let me make the base case for why everybody in this room wants it. Let's just take the granddaddy asset, Bitcoin, okay? Let's just start there. You may be excited that it's at 800 billion market cap. That is absolutely a nothing burger in the context of financial services. It is a rounding error because the majority of wealth in the world is managed by sovereign wealth and pension plans, both stateside and around the world. 100 billion, 200 billion, $1 trillion mandates that do not own a single Bitcoin, not one. So for all the excitement that we have in these conferences, and this is very important to discuss, it is so nascent, it is not even on the radar of these asset allocators. And they're not going to put it on the radar until it gets cleared by the SEC in one way or another, because the majority of their wealth is indexed into the S&P, the largest market on earth. And if you don't have access to that because you're somehow rogue, it's not worth buying Bitcoin. It's not worth buying Bitcoin at all because it's a tiny fraction of what they're trying to manage. Now, if we could get regulation, and I would argue if we could just regulate one coin at the beginning, let it be Bitcoin, and one stable coin, that would be fantastic. But staying on Bitcoin, here's what would happen. I'm an indexer. I asked the sovereign wealth, what allocation would you put into Bitcoin? And the typical mandate for those guys, we have 11 sectors of the S&P. Their rules are long only, no more than 20% in any one sector, no more than 5% in any one stock. So they may initiate their index of Bitcoin at 50 basis points. When you're running $1 trillion mandate, that is a ton of money. And so all of a sudden the demand for that asset, Bitcoin, becomes higher, the price goes up, but it gets better. If they bought it at, let's say, $30,000, and their mandate is they're going to be a 50%, or let's say 1% weighting, and it goes to a 2% weighting, within 90 days they sell it back down to 1%. Or if it drops, they buy it back up. They are the eternal bid for the asset. And all of a sudden, the stability of Bitcoin, instead of having 50% swings every 12 months or more, that's gone forever because there's an underlying multi-trillion-dollar bid for the asset. Now, I don't know why there's a single person in this room that wouldn't want that. So I encourage Lummis, and I encourage Haggerty, and I encourage Toomey, all of these regulators, let's get going here because the rest of the world is far advanced. Canadians already have an ETF in Bitcoin. They already have an Ethereum ETF. The Swiss have already licensed a dealer-broker attached to a crypto exchange. So is Canada. The UAE is doing the same thing with the ADGM. I run around the world trying to find places to put money to work. It's everywhere else except the United States. What's wrong with this picture? It's broken. We got to fix it. And I know there's a lot of other political agenda on before the midterms, and I'm sure Biden isn't sitting there saying, I wonder what Kevin O'Leary thinks about regulation on Bitcoin. I mean, he doesn't care because he's got a lot of other issues. But we got to get this dealt with on the other side of the midterms.
Bitcoin mining startup BitZero, whose backers include entrepreneurs and Shark Tank star Kevin O'Leary, has chosen North Dakota as the headquarters and the hub for its North American operations. Television personality and green mining advocate O'Leary is a strategic investor in BitZero, along with Dubai-based Phoenix Group, a Bitcoin mining rig supplier and venture capital firm. In the statement, O'Leary teased another announcement regarding a project in Montana that's due to be announced this week. To date, BitZero has raised about $100 million in investment capital and plans to go public on the Canadian Stock Exchange within the next 60 days, and then subsequently aiming for the listing to hit the NASDAQ.
You think that crypto will be the 12th sector of the S&P. Why do you think that?
Because of the productivity. You think about the number one sector of all sectors, the grandfather, it's currency and it's financial services. No economy can operate without it. The productivity enhancement tools that are available now as you contemplate higher speed transactions, what Polygon is doing, aggregating on top of Ethereum, figuring out all these things, all these incredible teams. And I look at it, I've said this countless times, but it's so apropos right now. Bitcoin is not a coin. It's software. Ethereum is software. Solana is software. Helium is software. Pollen is software. These are all software projects. The amount of intellectual capital going into these projects, these are the smartest coders in the world. They don't want to go work in any of the other 11 sectors right now. You graduate from Waterloo, you graduate from MIT, you come out of Temple, and you're a coder, you're going one way to blockchain. That's where you want to be. Now, when you get that much intellectual capital working on something, and I'm an investor, I got to wet my beak. Are you kidding? I know there's going to be incredible outcomes. I just don't know which ones. So I'm spread across 32 positions right now. I'm sure the majority won't work, but I only need a few. I mean, I own these things at their nascent, beginnings, and I'm hoping that some of these ideas work out. And we haven't even touched on NFTs yet. I mean, there's so much going on here that you've got to spread your bets. You can't just be a big chunk of Bitcoin, a big chunk of Ethereum. And you know that. You've done it very successfully. You've got the best performance record of any hedge fund. I mean, that's good work.
I appreciate that.
Kevin O'Leary has experienced firsthand the frustration that can come with using the traditional banking system. In April, his company was in the midst of closing a deal worth millions and millions of dollars. The wire transfer between the US and Canada was lost for multiple days, requiring multiple associates to work for hours and hours to unwind the transaction and quote-unquote find the funds to secure and close the deal. Ultimately, all was sorted out. But should this even be able to happen? Who is liable for the interest lost and deals that don't get executed? This was O'Leary's question. And he's right. The bank doesn't lose your money, but for a few days it's disappeared. And this happens more often than most would imagine, and does not inspire confidence or credibility, but few fight against the institution. Using stablecoin, it would have succeeded in minutes and would have saved my team countless hours and dollars, O'Leary says. It is inarguable that had this transaction occurred on a regulated crypto platform, it would have been protected securely end-to-end using blockchain technology that is the basis of the strength that crypto presents, making it attractive to many and provides the control that we require.
The promise for what a stablecoin could be is so tremendous and such a huge opportunity that it's okay to experiment with different structures. And so it's also all right for one to go to zero because we're so nascent in this and we're trying these new ideas, and this was one that didn't work. So maybe going forward, using algorithms may not be as popular as perhaps an asset-based stablecoin. But I look at it this way. Let's say I do this. Let's say I'm indexing for Europe right now, and I'm putting an index together. I'm an indexer, so we service sovereign and pension plans, and there's many people that do what I do. And let's say you're a sovereign fund and you're bringing in 250 million US cash a day because you're an oil magnet or you're an oil country. You want to index that into the S&P, X oil, X airlines. We do that. We get paid for that. So we see fund flows every day. Stable coins could be a huge tool for us. Think about it this way. I want to buy Nestle on the Zurich exchange. I have to take US dollars out of New York. I have to send them over to Zurich, ACH, 3 days. There's other ways to wire it, but if you're going to go bank to bank, there's a know your customer basis. It takes time. It can be done in 12 hours, but there's a lot of fees involved. Then I have to convert it into Swiss francs to trade it. I get clipped for 2, 3, 4, 5 bips on that, no value added. If I had a stable coin that both regulators agreed was a currency in a payment system, I could do that in 2 seconds at a fraction of the cost, buy whatever I want to buy, and then send it back the same way. That's worth $1 trillion. That's how big the FX market is in a quarter. Just the fees in that. Now, with that potential, I would love to see some policy, either the Haggerty bill, which I read, the Toomey bill, which I read, both of those make a lot of sense to me, and get some policy around this so I could use it as a tool institutionally.
Warnings of a coming economic hurricane by Jamie Dimon, CEO of JP Morgan Chase, the biggest U.S. bank, has rattled traditional investors. But the note of caution may have resonated with many crypto traders who have been speculating for years that economic and financial conditions looked unsustainable. One bet is that the U.S. Federal Reserve might be sufficiently unnerved by downward sloping stock prices to ease off its campaign to tighten monetary conditions, which it has said is necessary to tame inflation. But this thread of market logic was somewhat undermined this week when President Joe Biden held a meeting with Fed Chair Jerome Powell and essentially pledged to let the Fed do whatever it needs to do.
My turning point, and I get that pomp video shoved in my you-know-what every day from the CNBC interview. Every day. He never lets me forget. But the turning point for me was getting a call from one of the analysts I work with that watches the OSC in Canada, where we have a lot of investments, saying they're going to license the world's first crypto exchange attached to a dealer broker. And that just said, whoa. I mean, that's a game changer. A lot of people don't understand what that means, but what it means is that every Canadian citizen in every province can open an account, transfer fiat currency, Canadian dollars, into it, and be completely 100% compliant on their own crypto exchange. And they granted that in an order from the OSC. That changed everything for me. I said, okay, what's going to happen next? And within weeks, the very first ETF was launched on the Toronto Stock Exchange. Then the Ethereum ETF raised $5 billion in something like 48 trading hours. So that's the beginning. And then I saw the Swiss. Then I saw what happened in London. Then the ADGM in UAE. It's all happening, moving forward, and nothing's happening here. It's a very strange, eerie situation that the U.S. wouldn't lead on policy. And now I think with these senators you've seen here today and other policymakers coming, they get the joke. And I think as an industry, we've got to feed them as much information as we can to get it right, because a lot of this code, there's something very wrong when the brightest minds out of MIT or Stanford are living on a Caribbean island. What is that? Like, what does that tell you? That tells you that we don't have the infrastructure here on policy to bring these geniuses back on our soil and all the jobs and wealth they're creating. That's just wrong. It's 100% wrong, and we got to fix it.
So, do you agree with Kevin O'Leary's opinion regarding Bitcoin's regulation? Tell us what you think in the comment section. Also, don't forget to like and subscribe, and we'll see you in the next video. Thanks so much for watching.